Hi there. It's good to have you back. In our series of tutorials on evolvedAPPs today, we will be discussing how a journal voucher is processed in finance application. Recording of financial transactions is done through journal vouchers, and these vouchers are the building blocks of the entire financial reporting system. We have two types of vouchers in evolvedAPPs. First being the journal voucher created by the user, and the second is a large set of system-generated vouchers. System-generated vouchers are automatically created when documents like goods receipt, goods issuance, purchase invoice, sale invoice, bank receipt or payment etc. are created in their respective modules. Though such auto-generated vouchers will take care of majority of scenarios for us, but still there are situations where a user-initiated journal voucher may be required. Since this document gives us the flexibility to record any transaction in almost any account, therefore responsibility for accuracy and appropriateness would also rest with us as the user. We can find the journal voucher in Finance application under Vouchers module. On the list page are the vouchers from current financial year arranged on the basis of their approval status. Pressing New will take us to a blank voucher. First part of this document is either filled in by the system itself or is optional altogether. We can skip everything right up to the debit and credit accounts. However, it is highly recommended to enter as much detail about the transaction as possible. We would surely want to put up comprehensive information up front on general ledger through the vouchers we create. This would ultimately make the reconciliation process fairly easy and quick, hence saving us time on later stages. First two fields on the top left corner are instrument number and date. This is the document originating from within the organization that may be referred to in support of the particular transaction. In the case of system-generated voucher, instrument number is a system document, and it is auto-filled. However, for journal voucher, user has the liberty to fill in any reference deemed important. External document is any supporting evidence for the transaction that is generated outside of the organization. This could be a bill, a check, a letter, or any other document we may want to refer to. Description is formal narration about the transaction and is available as explanation of the transaction whenever the voucher is viewed. Such information becomes handy in reconciliation as well as in auditing where the reviewer is someone other than the user posting the voucher. Journal entry number is auto-generated by the system at the time of saving the voucher and is not editable by user. We can define any date for the voucher we are making provided it falls within the current financial year and is not affecting any closed reporting period. Journal voucher is the only document in system where the user-defined date is also the posting date. This is done in order to facilitate passing of adjusting entries on closing of period where at times not every task is completed before system date automatically changes to new financial year. In any case, the date of document cannot go into a past closed reporting period. In all other cases, the approval date of document is the actual posting date of the associated system-generated voucher. Alternate user reference consistently serves the same purpose throughout the system. This is a user-defined optional memo field available to facilitate cross-referencing the document. In the detail section, we can select the general ledger itself, or any of the subledgers followed by the actual transaction account. Subsequent to account selection drop-down, we have two columns, one for debit amount and the other for credit amount. Obviously, only one of the debit or credit fields will hold value at a time. GL line description is an optional field, but it is highly recommended to be filled properly. This information will show up in the general ledger report for the particular account. A detailed self-explanatory GL line description makes reconciliation process a lot easier. Then comes the optional cost element drop-down. This topic is covered in depth in a different session, but just as a reference, cost element is a further granular cross-account division of the expense account based on cost drivers. This is primarily for analytical purposes and does not change financial impact of the voucher in any way. When we have completed all desired information of one account, we can press Add Row and move to the next account to debit or credit it. Let's fill in the information about this second account as well. In the similar fashion, we can add as many accounts in a journal voucher as we may want. While entering debits and credits, we will ensure that both sides of the equation are always balanced. Otherwise, the voucher won't save and would result in an error message. Overall remarks about the voucher is again optional and are there as it is standard across similar documents. Satisfied about the transaction, we can then press Save to create and send the voucher into draft. We are moved to the view of newly created journal voucher from where we can finally review and post it. Obviously, we have the option to move out of the document without posting it and leaving this step for another time. This may be required when we want to double-check any relevant information. The voucher can be accessed from the draft badge on list page and also can be edited for any desired change. Users with full-scale ERP or premium version of evolvedAPPs will see the Workflow Launcher instead of Post button here. The launcher would enable the user to submit the document for approval by another authority. We, however, for the purpose of this tutorial, are using basic workflow. We don't want to edit the voucher we just made and are now ready to post it. We can just press Post and get done with the voucher. Once the voucher is posted, this cannot be edited anymore. Each document posted or approved is timestamped and cannot be removed from the system thereafter. We will have to pass a reversal entry in order to nullify the effect of an already posted voucher. It is therefore a good practice to post a voucher only when we are committed to the transaction. Well, that's all about the journal voucher for the purpose of this tutorial. Have a good day and see you soon.